So that was me right there.
The Wildflower townhome community in Louisville is a great example of how strange the Marshall Fire acted. While it destroyed some of the buildings here, it left others intact.
With the winds that day and the embers blowing around, yeah.
Wildflower is also a great example of how strange the insurance market can be for homeowners associations.
The first June after the fire, we're insuring 10 buildings because 5 are gone.
Wildflower president Mark Appelfeller says the insurance premium that first summer increased about $15,000 from what they were paying the year before for all 15 buildings. That's for a policy that insures the buildings and the common areas. It was an increase they expected and could easily handle. The second summer after the fire,
our insurance bill came back 600%, six-fold increase over where we had been before.
600%?
600% increase in our insurance.
The policy went from $65,000 to $437,000, and that cost doesn't even include the 5 buildings being rebuilt on the property.
That double punch, that double whammy, those body shots just keep coming.
They've been able to handle that monster bill with money from reserves, a small increase in HOA dues, and a $1,000 assessment on all of the homeowners here. Wildflower is one of many communities Steve on Your Side has heard from with the same problem.
How much did insurance go up this year?
Over 220%.
From $346 a month to $621.50.
This is the biggest crisis to hit HOAs.
In the midst of the biggest crisis to hit townhomes and condos in years, the state legislature has proposed a study.
There is no magic bullet out there that just says do this and rates will come down.
Democratic State Representative Judy Mobley says the problem is complex and the state needs time to research it.
It matters that we get it right, because if we regulate in a way that maybe helps one sector, then that potentially hurts other sectors.
If that bill passes, the study isn't set to report back until January 1st of 2026.
Everybody would like us to move more quickly, but also we have to move carefully and we have to follow the rules that we've set up for good reasons because of past experiences where we rush things and maybe don't get the right result.
I think it's too long.
Homeowners like Appelfeller say they understand things take time, but time has a cost.
That is another 2 years of burden, financial burden on us if there's no resolution to it.
So what are some of the possible solutions? Mobley says potentially being able to layer insurance policies on top of each other to get you the coverage you need with different insurance companies, or fixing the reinsurance market where the insurance companies insure themselves for big losses like we've seen in the past few years. I'm hearing from a lot of these different HOA boards, they get this policy right and they're paying a lot more for that policy, and on top of it, they're getting a policy that has a huge deductible if you have wind or hail damage. And so in a lot of cases, I've heard from so many of you out there who say you've seen an assessment of like $20,000, $12,000, $15,000. So you think about, you're paying all this money for an insurance policy and then you're still having to pay a lot more money out the door when something bad happens. There's got to be some sort of solution.
Property values are skyrocketing. Taxes obviously are climbing with them, and this is also coming as well. So it's becoming just the entire market has moved dramatically in every way.
Not to mention inflation. So you have so many things stacking on top of people. And this is really an entry-level place in the housing market. It's also an exit spot in the housing market because you have a lot of seniors who buy into communities like this.
It's heartbreaking. The American dream. You should be able to buy property, build a home, and it's impossible.
It's supposed to make sense.
Yeah,
financially.
seriously.
It doesn't right now. Yeah. Steve, thanks as always.